So, what if I told you that there's really only one path from having nothing to being truly wealthy? I'm not talking about 100 different get rich quick schemes, but one single core secret. Today, we're going to break down the strategy from a self made billionaire who claims this is the only way it works. Let's get into it.
That is a pretty bold statement, right? Just one way. And listen, this isn't coming from some random motivational speaker. This is from someone who has actually walked the path, from having very little to becoming unbelievably wealthy. So, who is this guy?
The voice behind that powerful quote is Michael Saylor. Now, you've probably heard of him. He's the founder of MicroStrategy, a software company that became super famous for making a massive public bet on Bitcoin. In fact, they're the largest corporate holder of Bitcoin in the entire world. And just so we're clear, when Saylor talks about getting rich, he knows exactly what he's talking about. His personal net worth is floating around $2.5 billion. That puts him among the wealthiest people on the planet. So, when he says there's only one way, it's probably a good idea to listen up. All right, so this brings us to his big declaration. What is this one method he's so sure about? It's not about picking some magic stock or coming up with a secret business idea. And it's definitely not about winning the lottery. It's way more fundamental than any of that. And there it is, the one and only way to get out of poverty and build real wealth, according to Michael Saylor, is to acquire assets. That's the whole game. Everything else is just noise. The entire goal is to turn the money you earn into assets that start working for you. Okay, so if that's the golden rule, how do you actually do it? How does a normal person, maybe with a regular 9-to-5 job, start building assets from absolute scratch? Well, let's take a look at the game plan. Saylor basically lays out a few ways. Sure, you could start your own company, and your ownership stake becomes a huge asset. But for most of us, the path is a bit more straightforward, even if it takes some serious discipline. You save money from your main job. You maybe get a second or even a third job to speed things up. And then you take that pile of cash you've built up and you use it to buy an asset, like a piece of property. Now, buying property isn't just about having a place to live. It's about turning on a really powerful financial engine. It's a concept called leverage, and it's how a little bit of your own money can start to control and generate a whole lot of wealth. So here's how it works. Let's say you work hard and save up $20,000 for a down payment. The bank then comes in and lends you the other $180,000 to buy a $200,000 property. Now think about that. You are controlling a $200,000 asset with only 20 grand of your own money. And as that property's value goes up over time, all of that growth, it belongs to you. Your wealth just starts to increase automatically. And if you look at the basic math, it's pretty clear why this works so well. Historically, real estate might go up in value by, say, 7% a year, but the interest on your loan might only be 3 or 4%. See that gap? That gap means the asset is making you more money than it's costing you. Your net worth is literally growing every single year just because you're holding on to it. But, and this is a huge but, this strategy only works if you buy the right kind of assets. Not all assets are the same. Saylor is super clear about this. You have to focus only on what he calls high-quality assets. So, how in the world do you know if an asset is high quality? He actually gives us a brilliant way to think about this. Don't ask what's cheap right now or what's trending. Ask yourself this one simple question. Is this something a billionaire will be desperate to buy from me in 10 years? That one little question just cuts through all the garbage. Think about it like this. A small piece of land in the middle of a major city. It's scarce, it's desirable, and there's a ton of demand for it. A billionaire would probably want that. Now, compare that to a huge plot of land out in the middle of nowhere. It might be cheap, yeah, but there's a ton of it, and nobody with real money is fighting over it. One is a high-quality asset. The other, well, it's not. So it all boils down to these 3 key tests. Is it desirable? Is it scarce? And this last one, this is absolutely crucial. Can you be forced to sell it when you don't want to? Because if the answer is yes, you are not holding a high-quality asset. A perfect example is trading crypto with really high leverage. If the market suddenly drops, the exchange can just liquidate your position to cover their loan. Boom. They sell your asset at the worst possible moment, and you get wiped out. A true high-quality asset is one you have total control over, one that can't just be taken away from you because the market gets a little crazy. Okay, so let's say you've done the work, you've acquired some high-quality assets. Now we get to the really genius part of the whole strategy. This is the move that separates the rich from the ultra-rich. It's all about how to use your wealth without ever actually giving it up. This quote says it all, really. We're trained to think that people get rich by selling their stocks or their real estate for a big payday. But Saylor argues it's the exact opposite. Mark Zuckerberg became a billionaire because he kept his Facebook shares. He held the asset and let it grow instead of cashing out early. So this leads to a really interesting question. If the big secret is to never sell your best assets, what does a guy like Zuckerberg do when he needs, I don't know, $100 million to buy a yacht or a new mansion? How does he get his hands on that kind of cash? The normal assumption, the thing you and I would probably do, is sell some of those assets. You'd sell some stock, right? Sell a building. But that is exactly what the wealthy do not do. That is the wrong move. Here's the real answer. This is the billionaire's secret. They borrow against their assets. They just go to a bank, put up their massive portfolio as collateral, and take out a loan with a super low interest rate. This one move changes the entire financial game. And here's why it's so brilliant. If you sell, you lose your asset forever, and you have to pay a big chunk of your profits to the government in capital gains tax. But if you borrow, well, first, you get to keep your asset, which just keeps growing in value. Second, the money you get is a loan, not income. So you pay zero income tax on it and zero capital gains tax. And on top of all that, because your collateral is so good, you get an incredibly low interest rate, maybe just 1%. It is a massive, massive financial advantage. So when you put all these pieces together, you realize this entire strategy is built on a very specific mindset. This is not about getting quick wins or chasing the latest hot trend. It is a fundamental shift in how you think about money and, more importantly, time. So the final mission here is to adopt this long-term way of thinking. You have to start thinking in decades, not days or weeks. You've got to be patient. You have to live below your means so you can keep acquiring more assets. And maybe most important of all, you need to have deep, unshakable conviction in the quality of the assets you've chosen, because you're going to be holding them for a very, very long time. And really, that just leaves us with one final personal question. Now that you have this billionaire's playbook right from the very beginning, saving that first dollar to leveraging it into something that's going to be desirable for decades, what is your next asset?